Today I am going to teach you how to draw support and resistance the right way. And this is not the normal way many traders have been drawing it, because results and statistics have shown that those ways of drawing them are not profitable. And many traders are still losing so much money trading support and resistance for so many reasons. Support and resistance is a very strong and valuable part of trading, because it is the major drive that determines a trend movement, and if drawn properly will get many trading opportunities which you will make massive profits from. Let's take a look at how normal traders draw their support and resistance line. Try not to laugh. They start by spotting a potential support and resistance line. Then you will think, that will be the only line. But what happens next? They draw and draw more lines, till the candlesticks begin to wish they could disappear, and leave those lines to do their biddings. These traders get so confused. If you take a look at their chart, it's as though support and resistance lines are the candlesticks they trade. They draw it so much that it becomes a headache to look at. These type of traders take every little candlestick movements as a tangible zone where opportunities will emanate from, and by so doing the chart will look like a garden of beautiful opportunities. Have you ever come across traders who trade 2 or 3 candlesticks as their take profit level, even down to the 1-minute time frame? They always see every single move as an opportunity to be taken quickly, but anything quick usually ends up as a portfolio disbursement, generously donated to the brokers, and to losses, which becomes profit to other smarter traders that are patient enough to wait for the big games. Overtrading is the sadness of a trader. When you look out for support and resistance zones on the chart, the first thing that should come into your mind is the word unique. The Oxford Dictionary defines unique as something or someone being the only one of its kind, unlike anything else. This gives you a hint into all you are about to learn in this video. Support and resistance lines appears as though they can be drawn a lot of times on the chart, but actually that's a trap for inexperienced traders. The major support and resistance lines are unique, and they represent the strongest zones of the chart. When you draw a support and resistance zone, your goal is to aim at an area when the market is sure to return to, so you can catch a profitable trade. Take a look at this. I could have drawn a lot of lines on this chart, but I only picked out the 2 unique spots on the chart. If you look well, you will see that there are just 2 horizontal lines on the chart against the multiple lines drawn by normal traders. I first off drew the horizontal lines from very good spots where market is sure to return to. Both the support and resistance lines have strong potentials, and heavy price movements have come out of them. You can see the heavy rise from the support line and the heavy fall from the resistance line. All these shows that the market will make great impacts when they return back to those zones. And as you can see, the market did make great impacts when they got to those zones. Take a look at the price fall from the resistance and the way market picked up price from the support line and made a big rise. Now, I will be showing you 3 sure ways of drawing support and resistance lines to catch big price movement. Number 3 is for professionals. Note, when you draw a support and resistance line, your main focus is the impact it will have on future price movement. There must be a particular expectation. The first way to draw a support and resistance line is to draw from historical records. What do I mean by that? You draw out the support and resistance line from the past records of trading activities, targeting zones which were the major influences of price movement on the market. These areas I marked with stickers represent the beginning of the movement, the area where I drew the support and resistance lines from. These areas are being targeted by a lot of professional traders and even bankers, so when price returns to the spot, it has more chances of moving in a big way to your target direction. In that way, increasing your profit chances the more. Here is how to draw them. First of all, you look for an area where price has fallen drastically from. Make sure you look for an area where the price did more impacts than the former price movements. That becomes a great resistance line. And if the price moves up in a bigger way, that becomes a great support line. This shows you that traders are really pushing price aggressively from that point, and a lot of investors have an eye on that particular area. The most important thing is the impact the price did from that spot, which was more than the former price movements. After those movements, you can see how the price respected the zone and fell from this resistance zone. It also respected the zone the second time by moving to the zone and falling massively. And when the price got to the support line, it took off from there and also rose massively. This is what you get when you draw out the resistance and support zones from historical price movements and project it to take advantage of the future price movements. Here is another price action on the resistance line, which has drawn the price down from that particular spot. See how many opportunities can come out from a simple support and resistance analysis. Let's see another example. If you look at the preceding movements, you will notice that none of them made greater impacts than this to spots with the blue emojis, and that becomes a tangible area to draw out your support and resistance lines. See how the market reacted more to the resistance line than the support line, and you may wonder why you won't be able to take trades from the support line even though price was close to it. It's because the price must touch the line for it to be tangible to trade on. This is what will differentiate you from other traders, that discipline to wait for the perfect price movements and not falling for anything you see. This method is one of the earliest support and resistance strategy developed by bankers and hedge fund traders. So when you see these spots on the chart, it promises you a lot. That price will or may return to that exact spot and move the market beyond. The second way of drawing support and resistance line is by following the zone flips. In this support and resistance strategy, we are taking advantage of what we call the flip zones. The flip zone means the situation where a support zone becomes a resistance, or a scenario where a resistance line becomes a support zone. You must have heard the famous trading quote, "The trend is your friend." Yes, support and resistance lines can also help you rock the trend. You don't even need a trend line to do this. All you need is your horizontal line. Here is how it works. When the market is in an uptrend, it creates lower highs and higher highs, and reverse is the case when it's in a downtrend. It creates lower lows and higher lows. That is the identity of each trending market. On the chart right now, you can see a clear uptrend. Even a baby can identify this trend. But a baby cannot trade this trend. In this strategy, the higher high is a resistance zone, which will be broken to prove that the trend is still moving in an uptrend and taking out sellers. And when price breaks the resistance line and moves higher, it turns the resistance zone to a flip zone, meaning that it's no longer a resistance line, but a new support zone for the continuation of the trend. You now wait for the market to return and touch the newly flipped support zone. But here are a few things you should take note of. 1. The market movement must make some good moves after the breakout. This represents the force of the buyers against the sellers. You should never take a little movementus as a breakout. A little movement after the breakout means that the buying pressure is not yet strong. 2. The retracement must touch the support line. Never take any trade unless the price has finally touched the flip zone. If you want to learn more on support and resistance pro-entry candles and the full day trading strategy guide, I will leave a link to it at the end of this video, and you can also check them out in the description box. Let's check out another example. On this chart, you can see that the market was moving in a downtrend, but then the buyers tried to change the trend, but something beautiful happened here. The sellers reclaimed the trend, but how did they do that? Just the same pattern of what I just taught you. You can see that the market broke the support zone and flipped it into a resistance zone. This way the sellers were able to gain control of the trend once more. As you can see here, the market broke out well and returned to the flip zone. This way you can take the trade because it actually touched the new resistance zone. You can see how massive the market fell from that spot. This is the easiest way of making money from support and resistance lines. Not only is it easier to draw, but you will also get trading opportunities faster. And you don't have to wait too long for the market to return to the support and resistance zones. The third strategy of drawing support and resistance is actually my favorite, and it is so well articulated that you can easily identify it on the chart, just as you can identify black from white. You wait for the price movement at a particular zone, then you draw out your line. It can be a support or resistance line, but on this case, it can only be one of them. Here you are not waiting for a flip zone or drawing it out from former historical data. You are trading the moment. The first step is to wait for 2 movements like this on a chart. Very important, because it shows that the market participants are really reflecting on that particular spot. The second step is to make sure that there was a break of structure to the target direction. The break of structure means that the market participants are driving price to that particular direction. Only when the market has broken a structure should you draw a box or a horizontal line on it, because it is only a break of structure that qualifies the formation. The similarities of each of the techniques of drawing support and resistance, which I have been teaching you in this video, is that they are very unique and easy to spot on the chart. They must not be hard to look out for if you follow all the procedures. After the break of structure, you should be expecting the market to return to the line or box which you have drawn. There is not two ways about this. It's a resistance line or a support line. No flips will be tolerated in this strategy. This pattern of drawing support and resistance is very good for trading market reversals and trend retracements. Make sure that the first 2 movements are at almost equal heights or low for a support zone. Only the wicks should connect them together. This one is easy, but most times it's more rare to find on the chart, depending on the asset or financial instrument you are trading. But each time it provides a sure signal for you to profit from. Let's do a quick recap on the 3 strategies of drawing support and resistance, which I have taught you in this video. The first strategy helps you to draw out strong support and resistance from areas of great impacts and be able to use them to predict future price movement when they touch those zones. You can be able to use this strategy to predict markets from the higher time frames in order to participate in huge price movement on the lower time frames. On the second strategy, I showed you how to follow and rock the trend using flip zones. Here support can be flipped to resistance and resistance can be flipped to a support zone. You take advantage of when price returns to the flipped zone after a good breakout. And lastly, I showed you on how you can draw out a support or resistance zone, taking advantage of price movements on a particular zone, confirming the intention of the market by a clear break of structure. This way you understand the true direction of the trade. I also taught you that there is only one zone at work here. It's a support or it's a resistance. There are no two ways about it. And you can only take the trade when price returns to that zone. The general advice I will give to you regarding these support and resistance strategy is that you must wait for the best and clearest setups. Not all setups are to be accepted. Don't trade confusing patterns in the name of looking for trading opportunities. And these patterns are like light and day. You can tell which one is really the right setup. Keep practicing these strategies, and as you continue, You'll master them and develop a big portfolio with it. Subscribe to this channel right now so you don't miss out on future strategies. If you need a Forex mentor that will personally guide and mentor you one-on-one, check the description box below for a link that will lead you into my Telegram channel. If you want to learn more in-depth knowledge about the full trading strategy on these supports and resistance lines, including the entry candles and best spots to get them on the chart, check out these two videos.